November 8th, 2016, 8 p.m. The Prime Minister of India appears on national television and in one sentence changes everything. Starting at midnight tonight, most of your cash will be worthless. 1 billion people freeze. ATMs run dry. Banks overflow. Panic spreads across the country. But in a small office in Delhi, one man is watching all of this and smiling. His name is Vijay Shekhar Sharma, and this is the moment he has been waiting for. Within weeks, his app Paytm will be on millions of phones. Within years, he will become a billionaire. His company will be worth over $20 billion. Warren Buffett will invest. SoftBank will pour in billions. But 5 years later, Paytm will crash harder than almost any tech company in India's history. Billions will be wiped out in a single day. This is the story of how one perfect moment created a giant, and how hype and broken promises almost destroyed it. Vijay Shekhar Sharma did not grow up rich. He came from a small town. No powerful family, no elite schools. Just a kid obsessed with technology. While others played cricket, Vijay taught himself to code. He wanted to build something big. In 2010, he started a small company called Paytm. At first, it was nothing special, just mobile recharges and bill payments. Most people didn't care. Cash was king in India. For 6 years, Paytm struggled quietly, but Vijay kept building. Then November 8th, 2016 happened, and everything changed. The government banned most of India's cash overnight. 86% of the money people used every day suddenly became useless. The country went into shock. People couldn't buy groceries, couldn't pay rent, couldn't even fill their cars with fuel. But there was one way to pay: digital wallets. And Paytm was ready. Downloads exploded. Millions of people joined in days. Street vendors, rickshaw drivers, tea sellers, everyone was using Paytm. It became the face of India's cashless revolution. Investors rushed in. Alibaba, SoftBank, Warren Buffett. Billions of dollars poured into Paytm. The valuation skyrocketed past $20 billion. Vijay became a billionaire. Paytm was no longer just an app. It was a national movement. But behind the scenes, there was a problem. Paytm was not making real money. To keep users, the company gave cashback, discounts, and rewards. Every transaction cost them money. They spent heavily on advertising, celebrities, and promotions. The user numbers went up, but the losses went up too. Investors didn't care. They believed one thing: grow now, profit later. But the numbers were ugly. And then came the biggest test of all: the IPO. In November 2021, Paytm went public, the biggest IPO in Indian history. The hype was massive. Millions of investors wanted in. And then the stock started trading. It collapsed. 27% down on the very first day. Billions of dollars disappeared. The media turned against the company. Analysts said Paytm was overvalued and overhyped. Employees saw their stock options lose value overnight. The share price kept falling. Paytm became a warning instead of a success story. So what went wrong? Paytm confused growth with success. Millions of users didn't mean millions in profit. The investors believed in the story, not the numbers. When the IPO happened, the market saw the truth. And the truth was painful. Today, Paytm still exists. People still use the app, but the magic is gone. The stock never recovered. The dream of becoming India's biggest financial company is broken. Paytm's story is a lesson. Hype cannot replace profit. Growth without a real business is just noise, and sooner or later, the market always demands the truth. Paytm had the perfect moment, but it forgot the most important thing. A company must make money to survive.